Interest rates, the Fed jacked interest rates up 21-fold. Any long duration asset, and in the world of equities, innovation is going to be the longest duration. All long duration assets were slaughtered last year. The bond market, now that's long duration as well, but it's usually a flight to safety vehicle. The bond market last year had its worst year since sometime in the 1700s. If that was going to happen to bonds, which are usually flight to safety, just because they were long duration, that was going to happen to ARK in spades, and it did. Now, where are we? The market is starting to look to the other side of the interest rate increase, and they're starting to look at inflation, which is crumbling. Inflation is crumbling. I know that a lot of people use the word sticky, but you look at the leading indicators of inflation, they are coming down rapidly. And we do believe we're going to see deflation, which we're already seeing it at many places, but even in the broader-based indices, and the Fed will have to adjust, and we'll be on the other side of the horror show we just went through.
Hello and welcome to Money Talks. In today's video, Cathie Wood takes us through her prediction for the Fed's next move on inflation and where she thinks the market will go in the next months. So without further ado, let's get started with the video.
I don't think we've been wrong about it. When we were in COVID, we were talking about inventory shortages that would cause supply chain problems and the inflation that would come from that. Sure, we didn't know about Russia's invasion of Ukraine, but I think when history is the judge, and it will be, that history will judge the inflation we went through as the result of a massive supply shock to the system. And they will look at the comparison, not to the 70s, which I know Larry Summers and Mohammed El-Arian and others have used that analogy. We use the 19-teens. We went through a pandemic back then, the Spanish flu. We went through a war, World War I. We were on the gold standard, so money supply had to fall as inflation went up. Inflation went to 24%, June of 1920, dropped to minus 15 in June of 1921, and we moved into the roaring 20s. Why? Massive innovation, telephone, electricity, automobile. This period is much more like that period than like the 70s. And again, history is the judge. It will look at the inflation chart, which went like this and is going like this now. And it will seem like it happened in a flash, even though going through it feels like we're in slow motion.
The Bitcoin market sentiment is indicating potential growth, as suggested by the moving average convergence divergence, a widely used technical analysis tool. Renowned financial analyst Jake Wujastik recently pointed out on Twitter that Bitcoin has experienced a positive divergence cross, suggesting a possible bullish momentum. Although Bitcoin recently surpassed the $31,000 level after a favorable ruling in the Ripple vs. SEC case, it is still facing resistance while attempting to consolidate its position. On major spot exchanges, Bitcoin is currently hovering around the $30,305 mark, with its market cap approaching $590 billion and a 24-hour trading volume exceeding $7.6 billion. CoinGecko data reveals that Bitcoin has declined approximately 56% from its record high of $69,044.77 reached on November 10, 2021. Mike Novogratz, CEO of Galaxy Digital and a prominent cryptocurrency enthusiast, has identified 4 potential catalysts that could drive bullish momentum in the crypto market. According to his recent tweet, these catalysts include the Federal Reserve pausing rate hikes, Ripple winning its lawsuit, the approval of a Bitcoin exchange-traded fund, ETF, and Binance reaching a settlement with regulatory authorities. Novogratz firmly believes that the approval of a Bitcoin ETF is not a matter of if, but rather when. Such an approval could have a significant impact on Bitcoin's price by opening the doors to a wider range of institutional investors.
Our asset retention has been spectacular. I think everyone would agree with that. Asset retention through 21 and 22. We're up more than 50%, some of our funds 60% plus. So there would be natural profit taking, but there's something else that has happened over the last year. Our stock developed what traders would call a very nice base, a trading range. And I think we began to see opportunistic trading in the mid-30s to the mid-40s, and it seemed to top out regularly in the mid-40s. Well, we've just broken through that. And so recently, this week, our flows picked up very nicely because there are traders out there who are looking at our stock and says, wow, if it breaks out of this nice long base, it could have a very powerful move here. And as you can see from the chart, we are still down. If you compare ARKK to the NASDAQ 100, you'll see the NASDAQ's getting close to its all-time highs, and ARKK, which is full of innovation, is much closer to its lows. So I do think we're beginning to see investors shift from the NASDAQ 100 or NASDAQ, take maybe losses or gains there and into our innovation fund, because I think the values when it comes to innovation are in our fund.
Larry Fink, CEO of BlackRock, has expressed optimism regarding the growing interest in cryptocurrencies among gold investors. In an interview following BlackRock's second quarter earnings report, Fink highlighted the increased inquiries from gold investors about cryptocurrencies over the past 5 years. He drew parallels between the impact of exchange-traded funds, ETFs, in democratizing access to gold and their potential to influence the crypto market. Fink emphasized that more gold investors are considering cryptocurrencies as a hedge against fluctuations in the value of the US dollar. According to Fink, BlackRock's foray into the cryptocurrency market aligns with the company's objective of creating user-friendly and cost-effective investment products. He believes that ETFs play a transformative role in democratizing investing and sees BlackRock as being at the early stages of this transformation. BlackRock recently reported strong second quarter results, with adjusted earnings per share of $9.28 on $4.46 billion in revenue. The company's assets under management now exceed $9 trillion. This is not the first time Fink has expressed support for Bitcoin since BlackRock filed its application for a spot ETF. He commended Bitcoin earlier this month for its potential to revolutionize the financial industry, likening it to the digitization of gold. Fink's continued optimism, coupled with BlackRock's commitment to accessible investment products through the spot Bitcoin ETF application, indicates a growing acceptance of cryptocurrencies as investment assets within the institutional realm. It reflects the evolving nature of the cryptocurrency market and highlights the potential for diversification and hedging against currency fluctuations offered by cryptocurrencies. So what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.